Our next guest believes that we're near a peak of disruption, for retailers, and the problem should start to alleviate. Joining us now is D.A. Davidson senior retail analyst Michael Baker. Michael, great to have you on. Why do you think that?
Well, this is the call that we had a few weeks ago, and we think it's coming to fruition. The call was that things are going to get worse in the near term, but then start to alleviate as we work through this backlog as we get closer to the holidays. And already we're seeing that short-term pain get a little bit worse with a bunch of misses in the last 24 hours for various supply chain regions, VF Corp this morning, Intel, Whirlpool last night. So it is getting a little bit worse, but it's going to alleviate itself eventually as we just work through the pipeline. Particularly as we get through the holiday season, which is really, clogging things up right now.
All right, so who's winning and who's losing as we do look to the holiday season, and we do talk about inventory and the mad dash to be able to get things to store shelves to sell to consumers?
Yeah, well, our call has been the bigger retailers are going to win out, and for a couple of reasons. One, that they do have the muscle to work through some of these things. So we saw that yesterday in Tractor Supply, who reported in their in-stock levels are actually up year over year because of very strong vendor relationships because of their size. So we think that'll ultimately benefit as we look ahead to other companies, retailers that are going to report, Walmart, Target, et cetera, because they have that muscle to work through it. In fact, it could end up being a positive because if retailers like that are able to have fewer out of stocks than some of their smaller competitors, they could actually pick up market share.
Michael, it's been pretty conspicuous, the underperformance of the off-price retailers. Now, they're big, Ross Stores and TJX, but it seems if the market is concerned about whether they're going to, since they're kind of, feeding off of excess inventories in some sense, that they may not have enough?
Fair point. There's not a lot of excess inventory out there, so that certainly does hurt them right now. Also, perhaps with the consumer so strong, a little bit of a move away from value and more towards convenient. And the off-price retailers certainly do better, I think, when the consumer is focused more on value.
So I guess then if you had to pick one name specifically going into the holiday season to invest in, as we do get an earnings season unfolding right now, what would it be?
Sure. Only one. I'll give you three. We like in the supply chain environment, as I said, Walmart and Target for the reasons I mentioned it, particularly Walmart, which has just underperformed a little bit year to date. So we think that one can rebound. Another one would be Ulta. They had their analyst day earlier this week. The stock was down, but they really don't have supply chain issues, so they won't see these issues. And they're earlier in the recovery. Remember, makeup is still down on a 2-year basis, so that means there's still more room to go in terms of the recovery on that one. And we think hopefully we're coming out of these pandemic issues, and so we think there's still some more demand creation in front of Ulta.